Hey everybody, it's Kate with the Creative Coast, and we are here with another lunchtime topic. Today is December 10th, and it's 12 p.m. We have a special guest. It's that time of year again, time to get all your ducks in a row and close your books. So Tanita Daniels of StraightPoint Accounting Solutions, she is the founding owner of StraightPoint Accounting Solutions, is here with us today, and she's going to be talking about financial management, how to close your books for the year end. So a little bit about Tanita. Tanita is the founding owner of StraightPoint Accounting Solutions. As I mentioned, it's a financial management company founded in 2018 that helps businesses, nonprofits, and entrepreneurs streamline their financial governance. She provides clients with outsourced bookkeeping and tax preparation services, as well as financial systems management. Tanita gained 16 years of nonprofit and corporate-based accounting experience, rising from intern to financial director. She honed skills in full general ledger accounting system implementation, government reporting, financial analysis and reporting, fixed assets, contract grant management, accounts payable, payroll, and procurement. Tanita is credentialed through the IRS as an enrolled agent. So we're so excited to have you here today. This is a topic that a lot of small businesses, new companies and startups may be confused on, and maybe they haven't been doing it monthly and they need to wrap up their books for the year end. So without further ado, I'm gonna turn it over to you, Tanita, to get started and teach us what we need to know.
Thank you, Caitlin. Thank you. Okay, I'm gonna share my screen here. Okay, so today what we're going to be talking about is closing your books for the end of the year. There are a lot of businesses out there that they either do their bookkeeping in-house, or they do their bookkeeping in-house and then they send it out to their professionals to actually prepare their taxes. So I just want to kind of go over some things to be mindful and to remind business owners of that they need to do at the end of the year in order to close their books out properly. Again, here's the contact information for my business, StraightPoint Accounting Solutions, and everything that you said in the bio. So thank you for that, Caitlin. Year end 2020. I know a lot of us cannot believe that we're actually finally here. We're actually finally almost at the end of 2020. This probably seems like it has been the longest year ever for many of us, with everything going on with the pandemic and everything else that's been happening. And as we're approaching, it seems like we just ended the 2019 tax season, which was extended due to COVID. So it seems like we just got out of that, but now it's time to finally roll into 2020. And 2020 is going to have it had a lot of challenges, and so will this tax year have a lot of new things that we'll see and things that we'll need to handle. So I just kind of want to go over some of the basic things and the key important points to closing the books. And some of these are going to be some best practices that can be used every month. So I'll also mention things that I suggest, key reminder that this should be done every month, because a lot of times business owners seem to think that you focus on your books at the end of the year, they get everything ready only at the end of the year. But honestly, your accounting, your financial management, it is a year-long process. And so we just want to make sure that people are actually handling that process correctly and that they're actually utilizing the information that they need to grow their business. So one of the first things that you want to do in getting ready to close your books for the year, or even just at the end of the month, if you're ending out your month, is you want to make sure that all of your business expenses are accounted for and categorized. And this can be really simple if you're using a system like QuickBooks or Xero. I always recommend to my clients to put a system in place. Of course, it's going to refer on your preferences. It's going to be based on preference. Some people are able to utilize QuickBooks really quickly. QuickBooks is probably the most popular one, but Xero is coming in fast behind that. And these are all fairly inexpensive, that you pay a monthly rate for them. You also are able to utilize what you need, pick out the plan that you need. So for instance, someone that is just maybe a painter and doesn't have a lot of business, but just does a lot, is just a sole proprietor, there is a QuickBooks app for that, versus where you could have someone that is a painter that has employees that is a little bit more complex. There are different packages for that. So I just suggest that you look at the packages and determine what fits your needs. If you're going to need to do 1099s, if you're going to be sending invoices, just pick what fits you, what fits you. The other thing with business expenses is all of these systems have the option of linking to your bank account. So they actually will pull over your transactions from your bank account. And it's ideal that you have a separate bank account from your personal account to handle all of your business expenses. I always recommend this as well to clients, to keep a separate bank account. So then that way you have all your business transactions in one place. I understand being a small business owner, sometimes you have to move money from one account to the other, but just do a transfer or withdrawal from one account and into the other, so that it just kind of keeps it easier for you at year end, so that you're not trying to determine what's what's personal, what's business. If you are one of those sole proprietor business owners and you actually use the Schedule C QuickBooks, it has where you can actually swipe left or right if it's business or if it's personal. So that's actually set up and designed for people that are maybe doing something on the side, or they just have a small business that they're running that's extremely small and it's not to where they need a whole full set of books. So again, I always say utilize these apps. Some people may find that Excel works for them. So whatever works for you, just make sure that you're keeping up with your business expenses as well as categorizing them. And when we say categorizing in QuickBooks and as well in Zero in the software, you'll actually go in and say, okay, if you're paying building rent for this month, you're going to categorize that as building rent. If it's office supplies, you're going to categorize that as office supplies. You want to make sure that you're categorizing all of your transactions so that at the end, it will pull over for tax time and for your tax professional, or if you're your own tax professional, to actually be able to prepare your return for your business. Okay. The next thing, once you get these transactions categorized, the next thing that you're going to want to do is you're going to actually going to want to reconcile your bank account. And I know a lot of people out here are going to be saying, well, why am I reconciling if it pulls over from the bank? Well, again, if you're utilizing a software, a system, it's just that it is a system. There can be hiccups. I've seen where transactions have been pulled over twice, have been duplicate. And if it wasn't for the bank reconciliation, which is actually comparing the balance on the books to what your bank statement actually says, then if this person would have ran their P&L, profit and loss statement, they actually would have saw their expenses would have been overstated. And nobody wants that. Nobody wants to see think that you're spending more, you're not making money. So this is why I always recommend reconciling your bank statement as well as credit card statements. A lot of businesses that I understand have credit cards for their business. You want to make sure you're reconciling those transactions. Most credit cards are also able to be set up to actually pull over the transactions into QuickBooks, but you just want to, as a check and balance, go in and actually reconcile to the statement itself. Make sure that you're balancing back to that statement. I always put that plug in. Also, we should be, I know that we've gotten into the world of everything on our phones. Like I look at my bank account right now, I can see my balance. And I don't know if a lot of you may remember, but even if you look at the back of your bank statement itself, it has where you can hand reconcile. So even if someone wants to do it the old fashioned way, that option is still there. Again, with reconciliation, this should actually be done on a monthly basis. So at the end of the year, you really should just be reconciling the transactions for December, for the December statement. So I always best practice advise my clients to reconcile at the end of each month to make sure you've captured all of your expense transactions. Next thing is mileage. I don't know if a lot of people had a lot of mileage this year with quarantine and then shut down, and it's probably picking back up, but make sure that you have a mileage log. A lot of time I've seen a lot of people get to the end of the year and then they're trying to remember. And again, I think this year is just a great example of why we need a log. I don't remember much before quarantine, honestly. I don't remember January and February that much. And I'm pretty sure there are a lot of people like that that don't remember much of January and February. And so I say that to make the point of it's documentation is key. Documentation is key and it's important. One of the things that I always advise is the point is not if you get audited, no one wants to be audited, but always stay audit ready. That is what my key is. Stay audit ready, meaning have all of the documentation that you need at the time that you're preparing your documents, that you're preparing your taxes, that you're closing out your books, so that if by chance you were audited, you can provide this information. And that's the key thing with being audited is providing. A lot of times it's documentation. It can be that maybe you misread or you didn't understand properly, didn't figure something properly, but they're questioning what you've put on your return. So you want to make sure that you have documentation. Again, going back to the business expenses, you want to make sure that you also have all of your receipts for all of your expenses and literally actually having the receipts. Because again, and I'm just going to kind of piggyback a little bit on the expenses and the receipts real quick. For instance, if for my business, if I go to Walmart and I get copy paper, and I know that this is a small amount, but it's just the point of it being for you to get the example of what I'm saying. If I go get copy paper for my business, that is a legitimate expense. And if you look at my bank account, you'll see Walmart on my bank account. But you know what you also see Walmart for on my bank account? If I go get groceries. Groceries there's no reason that I'm just going to go out every month and buy food for my business. My business does not feed anyone. I may decide to feed my staff, but I'm not going to go out and do that every month. So again, that's why you keep the receipt so that you can prove this is what I got from Walmart. I didn't just walk into Walmart and rack up $1,000 worth of groceries and now I'm writing it off as a business expense. No, if I went and I bought 2 packs of copy paper, that is a legitimate business expense. Also, along with that too, I could have purchased some other items. So that's why you want to make sure you have your receipts. Again, it's about being audit ready. Just in case you were ever audited, being ready, being proactive. And so just to jump back now to the mileage, you want to make sure that you're keeping track of your mileage, that you're keeping track of your business miles and you're keeping track of your personal miles. You will need to know the number for both when you're completing your income tax return. So you want to make sure that you're keeping track of that. Apps such as Mileage IQ, or if you utilize QuickBooks, especially the QuickBooks Self-Employed, they have tracking and where you can track your mileage in QuickBooks. And if you're someone that constantly drives, you actually can turn these apps on. And so they're operating in the background. And then later on, you can go back in and you can actually say, this was a personal trip or this was a business trip. You can actually categorize it and it will keep track of your mileage so that you'll have that at the end of the year. And you're not having to try and remember, and you actually have a log right there. Again, another option is just the plain old fashioned way of actually getting in your vehicle and writing down your starting mileage, writing down your ending mileage, your purpose of your trip, if it was business or if it was personal. That's another way that you can keep track of it. The next thing that we want to consider when closing out our books is invoices, your accounts receivable. If you're a business and you have any invoices that you need to send out to customers, you want to make sure that you're sending those out at the end of the year if they're for December purchases. And the reason being is because, again, even though we're preparing for tax time, we want to make sure that your records are properly recorded so that whenever you pull reports, P&Ls for the end of the year, if you want to look at what your sales were for the year, if you want to look at, your any other reports relating to your customers in QuickBooks, that information that you may want to use to plan for next year or just to see how well you did, you want to make sure that you have that recorded. So this is another, again, it's definitely a best practice every month. The next thing you want to do is every month, also as well, and particularly at the end of the year, is if you have any unpaid invoices cut for customers that maybe you billed a customer back in January and maybe they have not paid. Well, and you've made all the attempts to actually collect from that customer. Now the question is, do you feel like you're gonna collect it, or you know that maybe this person is no longer employed or they went out of business, and you can actually write that off as a bad debt. However, now if you're using the cash method of accounting for tax purposes, you are actually accounting your income as it's received. So you would be counting that if you receive the payment. So when you actually write this off, if you're using the cash method, you're basically just taking it out of the system. So your system will not say that you have $5,000 in invoices that have not been paid, when you know you're not going to collect $5,000 because of whatever the situation was and you've made every attempt. If you are using the accrual method of accounting, then yes, this will be the write off will be a tax deduction. But again, you're going to want to speak to your tax professional and let them know your situation. The next things we want to talk about are W-2s and 1099s. So for small businesses, some have employees, some have 1099 contractors, or they have a mixture of both. And so what you're gonna want to do, especially if you use a payroll management software system or company that runs your payroll, they'll automatically guide you and let you know what you need to do as far as filing W-2s. And when I say payroll management companies, I'm speaking of companies such as Gusto, QuickBooks Payroll, ADP. ADP and Gusto are really good. I know about guiding you on what you need to do as far as the end of the year, and QuickBooks as well. And with both, you can actually process payments for both your 1099s and for your W-2 employees. So you're going to want to make sure that that this process is completed, that you don't need the company does not need anything. If by chance you're doing this by hand, you're going to want to make sure that you process the W-2s as well as the 1099s. And I just want to point out that and you're going to want to do this after you process your last payroll for the year and you make sure all of your quarterly tax reports are filed for your W-2 employees. W-2s are required to be processed. Normally it's by January the 31st. However, January 31st of 2021 falls on a Sunday, so it will be February 1st. They actually have to be stamped and mailed to employees by that date. The same thing follows with 1099s. Now, the thing that's different this year with 1099s is 2020 is the first year for the 1099 NEC. Most of us are used to seeing the 1099 miscellaneous, and it has your non-employment compensation listed on the 1099 miscellaneous. That has now been changed. The IRS has created the 1099 NEC form that actually has that is actually for non-employment compensation is actually what it stands for. So the 1099 NEC actually now has the same filing deadline as the W-2. So those need to be processed and filed and put in the mail by January the 31st. And if you're using electronic software, it actually makes this really easy. But you have some people that maybe only have a few employees and maybe actually need to just print these forms by hand. And of course, everyone knows, maybe everyone doesn't know, but you can actually purchase these forms either online or you can go into somewhere like Office Max and Staples and actually purchase these forms. But if you're able to file electronically, I highly recommend filing electronically to process these forms. It just makes it a little bit easier. And again, 2020, we all know the IRS is backed up on mail from 2019 tax season. So it just makes it a little easier there. The next thing that I want to talk about is inventory. Not all businesses actually have inventory, but if you're handling inventory, you want to make sure that before you close your books, that you actually perform a final count, and it needs to be right before you actually close the books. This probably needs to be one of the last things that you actually do in closing your books. And again, this inventory is another best practice that should be done on a monthly or more frequent basis, not just at the end of the year. So you're going to want to make sure that you take count for your inventory, and if any adjustments need to be made in your system, if there's something that's not right, you want to make sure that you make all of these adjustments before you close the books for the year. Okay. Next, I want to talk about your fixed asset listings. Not all small businesses actually have fixed assets. And when I say fixed assets, we're talking about items such as building, land, equipment, anything that has a useful life of greater than 1 year. So you're going to want to make sure that you have your assets listed out, you have their purchase date, you have the date, the amount that you purchased them for. You're going to want to make sure you have that list somewhere. If you're utilizing a tax preparer, they'll also need this information. If you have a bookkeeping service, then they'll also ask you for this information because depreciation will need to be recorded. Depreciation are recorded for most items except with the exception of land. So you want to make sure that you have this list and that it's been updated. So in the case of 2020, maybe you sold a piece of equipment, you want to make sure that you update your list with the date that you actually sold the equipment. If you in the amount that you sold the equipment for, because there can be a gain on sale or there could be a loss on sale. So you're going to want to make sure that you're actually updating this list. Also, you may have purchased equipment during the year. So you're going to want to make sure that you have that on there so that you can get the deductions that you may qualify for due to this equipment. So you want to make sure you keep this list updated. Again, most things, this is closeout, but most things, it's just, I always say best practice, just make it easier and you're not having to remember what happened a whole 12 months ago. The next thing that you're going to want to do is you're actually going to want to make sure that your reporting and payment of estimated taxes and sales tax have been filed by their respective due dates. So if you have any, if you're, you should, if you're making estimated taxes, and what that is making payments based on your revenue that you generated for the month, you're going ahead and making payments. You want to make sure that you have those paid by January the 15th for any income that you receive between September 9th and December the 31st. And then your sales tax, you're going to want to check with the state that you're selling in and actually have your sales tax filed and prepared as well and recorded on your books. Once you get all of these things in place, we've talked about making sure that all of your expenses are properly recorded, that you've reconciled your bank statement. We've talked about actually making sure you've invoiced all of your clients, that if there are any invoices that are sitting on your books that you feel like you're not going to collect and you've made every attempt to collect, that you're actually going back and making adjustments to your books for that. We've also talked about inventory. We've talked about fixed assets. So once you've done all of these things and you've filed your sales tax and your estimated tax and made payments that have been calculated for you to make, that you've calculated to make, you're now going to want to run your financial statement. And you may run more than just the balance sheet and the profit and loss statement, but I just wanted to point out that these two are just extremely important for you to run. So I just kind of wanted to touch base on these and just talk about these. Again, these you run them at the end of the year, and you're definitely going to want to have these because you're going to want to share these with your tax professional. You're going to want to have them nearby if you're preparing your tax return. However, you're also going to want to look at these throughout the year and actually take the time to review the information and the data that's on them. You're going to want to make sure that this information is correct. Again, it's a system if you're utilizing a system, or if you're preparing it by hand or using Excel, you're just going to want to look at your data and just analyze what you see on your page. Again, your profit and loss statement is going to show your revenue and your expenses and compare them against each other, and it's going to net to either a profit, which is good, we all want a profit, or net to a loss. A lot of times people will run their business from just the amount of money that they have in their bank account, and you can have money in your bank account, but you could also have a loss for this month. The money that's sitting in your bank account could be from prior months. So you're going to want to look at your profit and loss statement because you really need to know, well, what happened. We Every business owner is going to be able to look back at 2020, and they're going to see where their business may have changed, especially if they were affected by any of the shutdowns and closure with COVID, or if they had to shut down due to staff being exposed. So you're going to want to look at your profit and loss statement every month because different things happen. If you're a roofer and let's say it rains, particularly if we had a normal hurricane season, a roofer is gonna know that like around hurricane season, his is he was not able to do much work. I'm pretty sure that they prepare for this. Um, it was a good year this year with everything except with COVID, so they didn't have to worry about hurricanes. But I'm pretty sure they prepared for this. But when you look at their profit and loss statement, it's going to reflect those type of situations that will have an effect on revenue. So again, you want to always look at your profit and loss statement. That's why you want to categorize your expenses as well as categorize your revenue and make sure that you have all revenue recorded. And again, if you're reconciling your bank statement, it's going to show you that you've captured all of your revenue. So you're going to want to make sure that you actually are looking at this report and actually analyzing it and even make notes that, hey, this is what happened this month. This is why this month was a hard time. Each business is different. So you're going to want to make note of that for your business. The other thing you want to look at is your balance sheet. And your balance sheet actually shows you your assets, your liabilities, and equity for your business. And these actually provide you with the financial position of your business. So you're going to want to take a look at this. You're going to want to look at what are your assets? What are your liabilities? Who do you owe? That's going to make these are all going to be the important factors in determining moving forward, business planning, what are your debts? The other thing about these financial statements is that if you ever go and you want to get a loan or do any business, and I'm pretty sure if anyone received any of the PPP loans or the EDIL loans, you were asked for this documentation. I saw in many groups where a lot of people were scrambling to produce these documentation, but you should be looking at these every month. This should be a part of your monthly closeout. You should have this on file because you should be looking at it and you should be making decisions based on the information that's here, evaluating your business based on this information. So I really kind of wanted to kind of harp on this because it's so important, it's so key. Just because you have a balance sitting in your bank account, it's great and it's great that you're not in the negative, but that doesn't mean that you necessarily had a profit for for the particular month that you just closed, or you had a profit for every month. So you're going to want to look at that and you're just going to want to make note of that. And next, we come for planning for 2021. I believe that one of the key things about accounting is being proactive. A lot of times, bookkeeping is done historically, but I still believe that you should be proactive in planning for your upcoming year, your next years. So, you're going to want to actually take the time to look at your current systems that you have in place. Now is a good time for anyone that maybe have been doing their own bookkeeping. I call it DIYing your bookkeeping. You may want to look at, okay, do I want to continue to do this? Because a lot of times, entrepreneurs have they have great dreams, they have great visions, and they're great at what they do. Everyone has stays in their lane. And sometimes the bookkeeping can be a headache. And if you see where you can outsource that, then my recommendation is outsource that. Outsource that to a company that's able to professionals that are able to help you with that. And it may not be that you outsource it on a monthly basis. You may actually just have an accountant actually just take a look at your books or every quarter so that you can stay on track. So then that way you're not waiting until the last minute at 2021. I'm sorry, of 2021 trying to compile receipts, trying to actually determine what happened in your business, because if you're doing that again, you don't know what was good months and what were bad months. You won't know until the end once you compile everything, when you actually should be looking at this all along and making decisions and thinking about things all along. So that's just something to think about for those that may feel like, hey, I'm falling behind. And it's okay to admit that. It again, you're an entrepreneur for a reason. You had a dream and a vision for a reason. And there are plenty of entrepreneurs that do things I cannot do. And that is why I utilize them, because that's not my strong suit. So if it's not your strong suit, I would suggest getting some help. Or even one thing that my firm offers is training. It's okay if you wanna do it yourself, but maybe you're not sure and you want to just have, like, someone to actually train you and walk you through and actually work with you and show you, "Okay, here's what you need to do," so that you can be successful. Again, there are also YouTube videos, Facebook groups. There are many different resources out there that can help you actually be successful, but I also encourage you to talk to your accounting professionals as well. The next thing that I recommend in planning for 2021 is actually creating a budget. And a lot of times I see some small businesses, oh, well, we're small, but no, where do you want to go? What is your idea for the next for 2021? What do you think based on the information you have that your revenue would be for 2021? You're going to want to utilize prior years. Now, 2020 may not be necessarily a good year to just look back at only 2020. You're going to need to look back at 2019 and 2018 as well, will be my suggestion before you just prepare a budget. Because again, it was an unusual year. And so what happened in August of 2020, you may have had a loss, but then when you look back at 2019, 2018, you normally had have a profit. And then you're also going to want to take into consideration what's happening with COVID. Where do we prepared, where do we expect to stand, what is the news saying, and just kind of gauge your budget on those things that are happening around you. That the thing about a budget is it's a guide for where you're going, and you're going to want to compare your budget each month to your actual expenses. So if you projected that in salaries that you were going to spend 20,000 and you end up spending 40,000, you're going to want to know, well, did I under budget or did I over budget? You're going to want to ask yourself those questions. What was the difference here? Or maybe you had more revenue, more sales than you expected, and you just did that great and you needed the extra help. So you're going to want to know those things. That's why it's important to actually create a budget. And again, like I said, the most common way is to actually use past year expenses and revenue to actually create and actually generate your budget. But just keep in mind, 2020 was a different kind of year. 2021 is probably still going to be different, but just actually keep all of those things in mind. And again, I just want to provide the information and contact information for my firm. We are here to help you. We focus on providing you with the accounting solution that fits your company, that fits your need. Every business is different, and that's what we want to provide is that unique experience to get you what you need and to keep you in compliance for your upcoming year and your success, and to work with you in increasing profits so that you can have the life that you want to live.